minute after, people. Thank you very much for attending. Let's get the ball rolling. I've got a couple of things to cover, and then we'll throw it open at the end. Brian says he couldn't make it. He had some presentation he was going to give us about his group that he trades with. So he is going to do that next month. So he is already on the schedule for next month.
I thought he just landed on Mars or something.
His group did, yeah. So cool. All right, great. So let me show you. I'm going to present a. I'm going to share one of my screens here, and it is financial. This one here. Okay. So you should see a. Is that correct? You see a financial presentations?
Yes.
Okay, great. So one of the things that's going to happen this year before September is that the Excess Profits website, my website, ken.excessprofits, will all change. Google is forcing us to migrate to the new format. So they warned us about 2 years ago, and Brian and I have been dragging our feet. But I basically bit the bullet this past week and a half ago, and it's been taking me about total hours, about 10, 12 hours to do it so far, over a period of a week and a half or so. But this is what it looks like. There's this. Do you see this hamburger in the upper left corner of the screen? If you click on that, you can get access to the rest of the website. And some browsers, computers, don't have that hamburger, and others do. It's designed to go to a computer screen, a PC screen, to a Macintosh, to an iPad, to an iPhone. So each interface will look different. So you can actually try this on an iPhone, and it should present a little bit different format, but it'd be more compatible with the iPhone. So just to give you a quick intro to it, I don't want to say any more than that. Just scroll on down through there, and you can see various topics. You can expand on the health stuff. You can learn about the coronavirus, all the best data that I have. So anyway, but this is basically the financial. So you can basically just click on this, and you can see the presentations from 2018. So it's a way. Hopefully it's going to be a little bit better for people, but we'll let you try it. And if anybody has any feedback, please feel free to send me an email. Let me know what works, and if it doesn't work, I'll make appropriate modifications. All right, so that's number one. And the presentation material that I have here, this is from Excess Profits. And so Brian hasn't upgraded this one yet to the new format. Hopefully he will. We've been talking about it back and forth a couple of times. Both of us it's extremely painful to go back and revisit these websites. Brian has done so much work on the Excess Profits website. It's going to take a while to migrate back to the new format. But anyway, so what I've been doing is I've been trying to produce a video and place it on the top of the month. So meeting video presentation, so you can see the whole presentation there. I edit out a few things. I try to not put in anything that is pertinent to a particular email address or phone number or whatever, just in case somebody else gets hold of it, that we don't get spammed. But typically I try to keep it intact. And if there's anybody that doesn't want to be on it, let me know. I will try to edit them out as best I can. but that takes quite a process. It's quite a process to be able to get a 2-hour video together and up on the Excess Profits website via YouTube, etc. There is what I was going to do is before I go into that, let me just show you something on excess profits. There was booking a seasonal trade here, and I don't know if anybody took that trade or not. It's been happening year after year. We've had it, I don't know, since from 2002 or so 93% of the time it's profitable, which is a pretty good deal. And if you look at it, this is when the booking calendar said to get in. You would be up about 8% right now. Or if you are an options trader and you trade a 30 delta, this is the delta on the bottom, or 30 delta on the bottom, you can see that this should be delta map. You can see that you would have gotten about a 360% gain in the last 7 or 8 days. So it's still holding true pretty good. It's nice to be able to have these things in our quiver. So if you guys are so inclined, please do utilize the calendar. And of course, the calendar here also has the Investools meeting today here with all of the details here. I usually try to put this on the next calendar for the next month, the Saturday or Sunday before, so that people don't get confused about which one's which. And I send it out to Brian so that he can prepare for the next meeting as well. So check it out, enjoy it. Hopefully people are making money on it. I usually like to put a poll on there just to see if anybody did the trade. Yeah. All right. So that was all presentations. Okay. So let me go to, let me see here. Oh, here we go. So there's a fellow at this YouTube video that goes through a very good development of how do you develop a spreadsheet, Google Sheets, on Google Sheets, and for a portfolio tracking. And he goes into some really good stuff. It's about an hour-long presentation. You take a look at it as your own free will. And it is in the spreadsheet, which is at, you can see it here. It's called Stock Portfolio. So if you click on that, you could actually, while we're actually making the presentation here, you can actually click on that, and you should be able to make a copy of it and start editing it as you see fit. I'll walk through a little bit of it here, just for people so they can see what it is. You put in your trade history. So, okay, what I did is I wanted to see if I wanted to check out Steve Alexander's stuff, right? So he sends out all of his trades. And so here is a list of all of his trades. He started with $30,000 in cash, and every one of his trades. So you basically put in this format. So if you have a trade sequence that you did in Schwab, in TradeStation, and Thinkorswim, whatever, if you put in these numbers and put in the numbers in these first columns from date through price, and then let the spreadsheet calculate the last one, what you'll end up with is a position tab, and it'll tell you what position you are, what's the percentage gains you have, the dollar gains you have. So it basically goes all the pluses and minuses and stuff like that throughout the whole spreadsheet and the history. And it will produce a dashboard. In the dashboard, it produces things like what's your account value. So it started with $30,000, and so now it's up to $64,000. And there's $3,900 in cash. They're sitting there now. This is how much it changed on Friday. And so you have an unrealized gain of almost $5,000 and a realized gain of almost $30,000. And it tells you the number of trades, shares owned. I don't exactly know why he put that into this thing, but okay. And then your average cost per trade, the number of cash deposits. There's only one cash deposits. And then it goes through and it says, well, okay, you've done all of this work, right? Okay, so how much? What's been your effective earnings? And so this earnings is based on 2,080 hours in a year. So this is Steve's trades, and if he spent 2,080 hours trading or a full-time job doing this, he would have made $17 an hour. I find it kind of useful to figure out if that makes any sense to people. If you can make a job and you can make more than $17 an hour, you probably want to take the other job. And then Steve's comment back was, I guess he can't qualify for the low income thing anymore, or minimum wage. So he's above the minimum wage with this. And actually, Steve was coming back and he's saying, well, I don't actually spend, that's 40-hour work week. He said, I don't actually spend 40 hours on this thing. I said, I spend about an hour a week on it. So an hour a week means that it's 40 times that. So you take 40 times 17, and that turns out to be, what is that? 40 equals 40 times 17 times this.
680.
Okay, thank you. 680. So $680 per hour. So that's basically how much he's making per hour. Not a bad return on time, right? So I thought that was pretty cool. And so I did one for me, and I just took these stocks. So I trade 3 different stocks, and I'm running the K-stochastic. So here's the K-stochastic gets in, gets out, gets in, gets out, gets in, gets out, gets in, gets out. So that's on TQQQ. And this is for SPXL. So these are trading my IRAs, right? So I get all these different trades. And so I basically just said, okay, so I outputted that information using TradeStation. And I went to the spreadsheet and I said, well, let me see what that does. So here is the history of all of the trades. It doesn't make very many trades in a year. So it only made 34 trades over the last year, but you're putting in about $100,000 into each one of those, where I was at that time. And so what does it look like in terms of the current positions? Here's what the current positions are. So I'm still long TQQQ, SPXL, and TNA. And then what does the dashboard say? So one of the things here is that I look at is what's the hourly salary? So this is based on 2,080 hours in a year. And so the hourly salary that I achieve is somewhere around $433 an hour. And that's not a bad return. That's not a bad income. And this is also a position thing, which shows how much capital, how much cash you have versus how much is in your position. And it says it's negative $9,000. it's, that's a little liberal. I mean, I put in 300,000, it's a little bit more than that. So, it turns out a really nice return on gain, return on capital there. So it's somewhere around 200% gain on that. And this thing, you could basically say, well, what's in your portfolio? This little orange button here says what's in your portfolio, and you can go and say, okay, what did the stock look like, SPXL, and it goes out and it loads this chart from Google Sheets, which shows the price action over the last year. So it's a very cool spreadsheet. I already coded it up. It actually has a script in it, so that was something else I learned. So it was a great learning process for me to figure out how this guy did it. And once again, let me go back, and it's at this the documentation, which is basically the YouTube. So if anybody wants to learn how to use a spreadsheet and Google Sheets, it's great. And what's nice about it,
can you put that link in the chat?
it's actually on the website. So you can
it's on the website?
Yeah, it's already on the website. So, yeah, let's see, copy, just, yeah, here, let me just do that real quick here. Put it in the chat. So
I got it, Ken.
Oh, Jen just
Okay.
posted it.
Got it. Okay, cool.
Thanks, everybody.
All right. So yeah, so that was really, really cool. Fun thing to play with. Once in a while, I need some creative spreadsheet, mathematic diddling entertainment. So that's what I ended up doing. I had some free brain cycles, so that's how I spent them. And I like the idea that I can actually see what that I'm doing better than I would have if I would have been a consultant. So, and hopefully everybody on this meeting is also finding the same thing for themselves, that they're making more money doing this than they can if they were actually working another job. All right.
Ken, the big caveat to this is by using Google Sheets, they know your finances.
So you don't have to put in your exact number. You can scale it up, scale it down, divide it by 10.
If you imported it, you're just going to drag the numbers across.
Yeah, so it's a little more complicated than that. So if it doesn't import directly. So I had to massage. You got to put in the history, and you have to massage these fields to get them into this format.
You entered each one of those manually?
You could, however, and it's got some nice, cute things, right? So you could say you got this pull down menu. You got buy, sell, deposit, withdrawal, drip, dividend. So there's a lot of cool things in there, but you can also just copy and paste these columns here, the first 5 columns.
Yeah.
But you have to go to your Thinkorswim platform, TradeStation platform, and massage it into that format. As long as you're massaging it into that format, you can put in any scale factor you want, divided by 100, divided by 1,000, or whatever. Just some way to obfuscate it if you don't want it. Yeah, but it's like, I thought it was pretty cool. So I don't have all of the different accounts. This was just one, my IRA account. So, and it's not exactly, I didn't put in 300,000. I've got, I'm off from there a bit, but it's real simple for me to scale by 2 or by 10, whatever, right? So, okay. So, all right. So are there any questions on any of that stuff there? And if there are none, you put them in the chat. So I got Jennifer is looking. Jennifer's looking in the chat, and I'm going to periodically look in the chat. But right now actively presenting, so it's kind of hard for me to keep track of all the different windows. I've got 1, 2, 3, 4, 5 windows up just for managing this Zoom meeting. So I'm trying to keep my wits about me here.
There's a question whether the spreadsheet can import, looks like option transactions too.
So not with Google Sheets, as far as I know, unless somebody knows different. I have not been able to find any source for option data. If you want to use option data, you're going to have to somehow take this and you can download it to your computer and create an Excel version. But what it doesn't do is there's a script that is behind this, which is a really cool script. This is a script behind it. Now, if you, going a little deep here, people, I know, but this thing basically massages the data and puts it in a format that is used by the various sheets. So I won't belabor this point, but that's an oddity that probably will not download into an Excel. But I'm sure somebody who is an Excel aficionado, professional, will probably be able to figure out how to make that happen using Visual Basic. So I hope that answered the question. All right, so yeah, so in Excel you can indeed download you can indeed write Excel spreadsheets that use the Thinkorswim platform to suck up the option per information. So yeah, you can do the same kind of thing with all the options as well. Although I don't know how you would do this, because this thing actually goes back through history. In order to do this dashboard, it actually goes historically and it actually finds the price of all these different stocks. Whereas with options, if you're only going to be available for, they'll only be available for 1 month, as far as I know, unless you know how to do think back and write a script to do think back and that kind of stuff. So I will leave that up to an Excel / Thinkorswim expert. This was my exercise. This was enough of an exercise for me this past month. So, all right, is Steve here? Is Steve Alexander here? I don't know, we got a couple of Steves here. So, all right, so I don't see Steve, but all right, so what I was gonna do is, so I don't know how many people are using Steve's stuff. He basically sends out, let me make this presentation here. Whoa, let's see here, why didn't that work? So Steve sends out an email now. So he was sending out tweets, and I had it set up so that it would alert me with his tweets. But now he moved over to an email, and so he's done exceedingly well. I think it's 100%, it's over 100% this past year. Hold on, one quick thing here. Grant, I see you on. Could you send me a chat with your email address? I won't post that, but I was trying to get hold of you this past week and I couldn't send you an email. Anyway, go back to Steve's stuff. So Steve sends out an email, and the key is that he's sending out the email not only the night before, sometimes he does it during the day for an opportunity. So I tried to explain it to a few different people, and it's not easy, not real straightforward or easy on an iPhone to do that. So I figured I'd put together a little presentation to show people how to set up their iPhone so that they receive an email alert. So someone like Steve sends you an email, bye, with a hot tip, right? And you want immediate notification. Well, how do you set it up? Well, first thing you do is you go into your email and you select this little icon here, which is information, and you enter, add a VIP, very important person, right? So I select that, and what I did is I added Steve, and then I got Michelle on there. Two very important people to me. And then you select VIP alerts so that it takes you to your settings, and you enable the notifications in there, and so you get a banner, sounds, etc. So you select this, and then once you're there, then you get into mail notifications, and you're going to select the mail notifications, and then you select the VIP. So these are in notifications. You got to say allow notifications, select the VIP, and in there you want to, this little slider, you got to have that green. It depends on how you like to get notifications. There's 3 different screens on the iPhone, and I wanted all of them. So when someone sends me something, I would like to be notified visually as well as a sound. So I get a little tweet. It's a real simple little thing, just says tweet, and that's it. And that's enough to tell me that, hey, something's happened. So hope that gives people an idea of how to set that kind of a thing up. So in conclusion, next time some VIP sends you a hot tip, you get immediate notifications. And sometimes you make money, sometimes you lose money. And this is the life of a trader. So as long as you have a positive expectancy, and that's what Steve's got in his all the analysis that I've seen, he over long term, it does indeed make money. So hopefully this will be something that people will be able to use. I don't know how many people use their phones for alerts versus just watching it on their email. So, any questions, comments? Okay. None. All right. One of the things that I also like to see is how we did in the past. So there were some recommendations from the last meeting and the meeting before that. So one of them was we had this ARK, ARKK, and this shows so if you would have bought 100 shares when we had our last meeting and you would have held it to now, you would have almost a 5% gain. And what I like to watch is the money flow. So there's still money flow going into ARKK. And then somebody mentioned ARKG. And yeah, money flow going in and out, but the gain has been down 3%. So it's not big one way or the other. I don't know if anybody has taken a look at Block. This was one that I ran across this past month. Block. So there's a lot of people talking about Bitcoin and all that, and all the different coins. Well, they're all based on blockchain. And so they created an ETF, which is that looks at various companies that do blockchain stuff. And they put it into an ETF. And this is blockchain. So if you would have bought it after the last meeting, you would have been up about 54%. So it's something to keep an eye on. If you get a little pullback, you might want to consider it. Although for me, the money flow is starting to move out, so people are taking profits out of it. So I don't know if you want to get into it at this point in time. So people last time, I don't remember who who put it, who suggested overstock? Was that you, Scott?
Yeah, that was for like for range trading or intraday because it just moves a lot intraday.
Yeah. So just
Percentage-wise.
buying and holding that sucker up 63% till now. That's a nice gain. Very nice gain. And then there was GameStop. Everybody heard the GameStop fiasco. And so, yeah, it went way the heck up. And now it's back down. And so it's basically from the last meeting, it's up about 4%. But if you look at the money flow, it's going out. Not something that I would want
Hey,
to
Ken?
control. Yeah.
On the go back to block.
Yeah.
I found it interesting that as it was rising, the money flow was going down. So are you looking at like trades that hit the bid and the ask like intraday? Like, how are you measuring money flow?
So what happens is that so what's happening, you basically monitor, or with TradeStation, you accumulate the number of times that it hit the bid, the number of times it hit the ask.
Right.
And so you sum those up and you find out whether the money is flowing into or out. And so people are taking profits. So when it's going down like that, people are taking profits. And so what you usually find out is that it goes up, tops, and it starts following on down. But you usually have this overshoot, and that's when the big money is leaving, and that's what you see in the money flow.
Yeah, that's a pretty cool indicator.
Yeah, and so you should find that too. I don't remember if I sent that one to you or not. It's on the.
Yeah, I got that. It's like a cumulative delta sort of thing.
It's what?
It's kind of like a cumulative delta, but it does all the intraday work for you. You don't have to.
Yeah.
You don't have to have an intraday chart necessarily, do you?
It's what? Yeah,
Yeah.
you have to have an intraday chart.
Oh, okay.
Because with TradeStation, so there's a thing called unbalanced volume, and unbalanced volume just basically looks at the individual day, and it says if it went up, it takes all of that volume and attributes it to that one day.
Yeah.
Well, that's not right, in my opinion. And you'll often see that the money flow is going opposite to that. So, and that's what I keep on finding. So I was fine. I couldn't get correlation when I looked at the other indicators. So the one that I have, the money flow, will switch to the other unbalanced volume when you go over to the day bar, because that's the only things available when you're on that interval with TradeStation. But when you're in intraday, and you could go through 390 minutes, as long as you say minutes, it will present the intraday information, which will be the money flow.
So, but is it measuring every tick or just every minute? It's basically an unbalanced volume chart of every minute.
So it's looking at the number of times that it hits the bid or hits the ask.
So it's looking at every tick.
Yeah, it's looking at all the ticks. It's just summing up all the ticks, all the buy ticks, all the bid ticks, all the ask ticks. That's all it's doing. So yeah, if you look, what?
TradeStation must keep a summary of like every minute, because otherwise, because your computer's not doing that, it's like a separate data series.
It's a data set.
It's a
data set. It's a big data set.
Nice.
They actually have a data set of tick data.
Yeah.
And it goes back. It's not forever. I think it's 6 months or something like that. So you can look back about 6 months on it.
But like if I tried to reproduce this, say in NinjaTrader, I would have to have a tick chart, and then the software would have to look at each tick individually. But this is a 30-minute chart, but it knows within each 30-minute bar how many ticks were hitting the bid and the ask already. Like,
yeah,
because that's not part of a normal 30-minute bar series.
Correct.
No.
Yeah. Yeah. So yeah, I mean, it's a really esoteric. I get into one of these modes where I start reading through their documentation, and I read these I was like, oh yeah, that's pretty neat. I wonder how I could use that. And so I start writing code around it, right? And when I found this, it's like, this is really cool. And it validated some of the stuff that I was doing with big charts. More than 20 years ago, I had big charts up, and I would see the money flow was going out, and yet and the price was going up, and then all of a sudden the price would just drop like a rock. And so I was saying, there probably is something to this money flow. So when I found it in big charts, then I tried to find it in other data sets, and the only place I found it so far was TradeStation. And I don't know if big charts, I haven't used big charts in years, so I don't know if it's still useful or used there. So anyway.
Hi, Ken, this is Judith.
Hi, Judith.
Hi,
Yeah.
I have a question. How are you using the money flow and comparing it to the volume? Because I see the volume in the upper right corner of your chart there.
Yeah,
These
it's
are-
volume,
these two-
that's volume on monthly or week, that's weekly volume. And then I have underneath this thing, there's another volume for daily. But I just wanted to keep people focused on just this one piece here.
Yeah, I'm just curious to see how, when they're diverging like this, you have money flow on the downturn and then volume. Well, that
Picking
now
up.
that you say that's weekly, but what with the
So
daily volume?
here's the daily bars here. So
Yeah.
you see that the money was can you see that? It's real tiny
Yeah.
here.
Yes,
But
we can.
it's the volume was picking up as it was pushing it up, and then it started dropping down. The volume started dropping down, and that probably is coincident with the money flowing out.
So they're usually moving together.
I guess, yeah. I haven't tried to do that. I looked at it with TradeStation. I don't even bother with that. This makes it simpler for me to look at.
Mhm.
So, but yeah, you could probably maybe ascertain something from volume, but I tend not to use that. So anyway,
Okay, thanks.
sure. And Soxel is all over the map. It's just going up and down. So there was another one so we have these stocks. So one of the things that would be kind of nice would be to track what stocks people recommend and then go back and see, what's working and what's not working. I really like that. I'm an engineer and I try to figure out what I want to do, and I actually go through and do it. And then I go back and I review it to see if what I thought was going to happen actually happened. And it helps me improve my in this case trading or my development, any kind of development work. So I think these were some of the other ones. So these last few here on this list were ones that we mentioned at the last meeting. So we talked about overstock already. That's up real nicely here, 63%. And ACAD Pharmaceuticals, and that's dropped like a rock. So, and then we have money was flowing out of it back then. Then we have Sava. And that one, I don't know who recommended this last time, but that's truly amazing. That's up 330% since last meeting. So anybody own up to that one? That was really a nice pick.
That one also was it was I think a biopharmaceutical company, and I remember seeing something in the news about it being the target in that Reddit group that just drove that up. But the curious thing about Sava is that it didn't go back down to the lows. It balanced out here at the $50, $55 level. I don't trade it. I've just been watching it because I saw it jump up.
Okay.
This is Sri. Actually, the Sava drug, they seem to have an effect on Alzheimer's. That's the reason it's doing well.
That's right. Yeah. Yeah, they had some sort of announcement in Alzheimer's, but I just wanted to see how it, so this peaked at the 220.24, and how did GameStop do their 2.4? Did GameStop, so GameStop actually peaked way back here. So Judith, you're saying that Sava was a short squeeze?
Yes, in fact, it didn't happen concurrently with GameStop. So after the GameStop fiasco, then they moved on to others, and I saw that Sava was one of those targets, including silver, which I was in at that time, and it just shot up. Silver was unbelievable. Like within a day, it just shot up. Silver, and that it was just they moved from one stock to another, and you get these surprise jumps, and then they come back to a realistic base, which fundamentally, I mean, for different reasons, silver was already on an increase before the target. And the Tilray is another one, TLRY,
Yeah, that's correct.
which is a cannabis stock. Tilray has agreed on a merger with Afria. So both those stocks are now, will go under the ticker Tilray. But that, I mean, the cannabis was a target as well within this community. And they just shoot up like this. But fundamentally, it was already moving up because of that merger with Afria. And it just came back to a base again.
Yeah. Does anybody know if the open interest? So one of the things that happened with GameStop was that they had, I think they said at one point, 109% of the shares were shorted, which is the perfect storm, right? But I've never seen any place that had a short interest above the available stock on the market. So that was really a fiasco. But I can't imagine that happening again. So if somebody knows some of the others that have happened, that would be interesting to see, because it doesn't make sense to me. So anyway, so PLTR is another one that it's up 11%, but it's just like all over the market. And so all of a sudden so when it got hit in price, the money flow started shooting back into it. And this thing usually moves 6 to 10% in a day. So if somebody likes to ride the wild ponies here, that might be something.
I am in Palantir. This is Judith again. And I just wanted to make a comment that the founder of the ARK funds, the ARKK, her name is Catherine Wood. She publicly announced, and all of her trades are publicly listed. So on a daily basis, she was one of the big buyers in Palantir as an innovative company. This past week, I can post the link, but she was a big buyer in here. And on a daily basis, she'll post buys and sells if you sign up for her service, for email service. So it was just she was clearly on the side of this company being in the next 5 to 10 years. She's not a short-term trader. She's within a 5-year span.
Yeah.
She anticipates this cybersecurity company.
Yeah. So ARKK is doing exceedingly well.
You know which other one I wanted to mention? ARKF. That's her fintech. It includes PayPal, Square, Mercado Libre. It has many other fintech companies globally, which I like. I like her focus on global innovation.
ARK what?
F as in Frank.
Okay.
It's been a fabulous stock because of PayPal's lead in that. A big portion of that fund is PayPal and Square, and it's been going sideways for the beginning. Probably
it's doing pretty well right now. We got nice money flow going in for almost since the beginning of February. So, and it's up almost 19%.
And these are ETFs. So she's actively managing these ETFs.
Okay.
And in PayPal, when it broke out of a range, if you look at the PayPal chart, it recently broke out of a range. I was watching. I was in PayPal, and I started to take profits. I started to shave some profits off, and it was an earnings gap up, and I saw her buying more. Which, I mean, she bought into strength, and to my surprise, PayPal just kept going up after the earnings.
Yeah, I am impressed with her. I watched a couple of her YouTube videos, and it's pretty impressive. Very nice.
I just wanted to mention the other feature that I appreciate is that she has white research papers that are being sourced globally through crowdsourcing. So she's the same concept that you were mentioning, Ken, that you put information out, you evaluate it, and you get experts in the field to give feedback. And it's all public information, which is very unique in her strategy, this creating input from around the globe for people who are specialists in their areas of innovation within the platforms that she has. So FinTech is one of them that's been doing very well.
Okay. Do any of you watch the program series called House? I know he's an obnoxious SOB, but his concept of differentials, I was watching him just last night, and it's just like this forum that we have here is very, very similar to the differential. You know, somebody says something, hey, we've got this problem, and Judith jumps in and says something, and Bob says something else, and Steve says, it's great. This is really fabulous. I'll tell you, I make more money off of this 2 hours than I do out of anything else on the entire month. So I want to thank you all for participating in these differentials, may want to call it, or just simple discussion. So thanks. So, okay. All right, that was just a little side note there. Any others? Somebody said United Airlines, so I don't know if that was something that Steve put on. But the United Airlines, the money is flowing out of it right now. I would be a little cautious.
I have another one, Ken.
Okay.
Just to see, I'm curious to see if anyone is looking at Futu, F-U-T-U. It's a Hong Kong stock exchange. This one's also one of those high flyers that is just, when it breaks out, it just keeps going. I'm just curious to see if anyone else is trading this.
Not that I heard. So I don't know how many of you watch Liz Ann Saunders, but so you're talking about the Hong Kong market. So Liz Ann Saunders tweeted this past week. She says that these are the countries with the largest stock markets. And this one on the top here is the United States, of course. And then China is in red, and it's getting bigger. Their stock market's getting bigger. But Hong Kong is even below that. So, you know, when you're betting on a horse, you want to take the biggest, strongest horse typically. So I tend to stick with the U.S. stock market, if at all possible. Also, one other thing before I go on is I mentioned last month about commodities being leading in the market, and this is another one that Liz Ann Saunders presented, and she shows that real assets and commodities are basically going up in value. This was some way of saying that, hey, you know, we're starting to see inflated prices, and she shows that how these real assets and commodities are starting to really go up dramatically. So I would think that we should probably want to bet on them, especially with all the new stimulus coming into play. But yeah, anyway, so so somebody said okay, I see another thing in the corner there. So I'm going to put in these other, so somebody mentioned PRNT and IZ.
You can add the ARKW. That's another good one. It's actually the since inception for Kathy's funds, that one's been doing very well. Since 2014 when she created her funds.
So here's this one that was 3D printing. So the 3D printing was going up real nicely, and we've got a nice 14% gain for the last month, but you can see money is flowing out of that. So I would be a little leery at this point. And so what happens is that the money starts flowing out and you see that there's a big inrush. And then pretty soon the market price catches up with it. So I like it that it's a leading indicator. You get to see basically an X-ray into the market when you were looking at the money flow. And then the IZRL and that was going up, and that is another ARC, Israeli Innovation Technology. Gone up 9% in a month, but then we see that the money is flowing out of it right now. So I would stay clear of that. I really like this when you see ARKK, money is flowing in, prices are moving up, you know, diddling back and forth a little bit. But when I see correlation like this, that's wonderful.
Ken, this is Sri. Can you check your graph on FCX? FCX is a copper mining. FCX.
FCX.
Yeah.
Report, yeah.
Oh, yeah.
Here I show you.
Yeah. I got it. Yeah, I got FCX. Yeah.
Yeah, they're number 18.
Yeah.
Yeah, it just shot up, I
Well,
think
kind
for
of-
Thursday or Friday, it went up.
Yeah, so we got a nice breakout here. And yeah, so FCX is basically the miner of, so you got a 10% gain here on Friday, which is really, really nice, almost 11%. And Alcoa Aluminum is the same thing. So these are both commodity companies, and they are doing extremely well right now. So yeah. So there's also a company called, or not a company, it's a, it's Transocean. So Rig was down to 65 cents here in the corner, and it's now up to $30.50. So it's deep sea drilling. It'll be interesting to see how the new administration deals with that. But the money flow is going up and down. So I'm staying clear of that right now myself.
What about Fiverr? Do you have Fiverr? FVRR. F as in Frank. Yep. V as in Victor.
I gotta get my little phonetic alphabet here. FZRR?
FV, V as in Victor.
Foxtrot, Victor, Romeo, Romeo.
Yes.
Thanks, Steve. Yeah, I usually try to get my phonetic alphabet off to the left of this thing here, but okay. All right, so yeah, so it's the money flow is going up and down. It's just it's doing well long term with the weekly price action, but locally maybe want to wait for a pullback.
Yeah, that's interesting. The money flow is like a under the cover look.
Yeah.
It's a great tool.
Yeah, it is. I find it really, really useful, especially if you're doing anything that's going to be a little longer term. If you're doing stock swing trades like Steve or myself, you don't even bother looking at that. You're looking at price action typically more so than long-term finances. So anyway, let's see, did I have anything else here? Oh, so Bill Burmeister, I don't know if you're still there, Bill. He was mentioning that trying to get a TradeStation account, that they're on a backlog, a huge backlog of trying to set people up. I had when I did it, it seemed like 2 or 3 days, and I was up and rolling, and he tried to apply for a TradeStation account. And so what ended up happening is that I gave him my Brian Chow, bchow@tradestation.com, and Brian, within 10 minutes, I sent him an email. So he was getting response or pushback. How long was it, Bill? 3 weeks before you can get a account?
Yeah, they told me it'd be 3 weeks to approve it. So I responded, I called Brian, got no answer, got a voicemail. So I responded to his email and haven't heard back.
Okay. Yeah. Did you fill out the form online? He said to fill out the form.
That's what's waiting 3 weeks now.
Really?
That's in. The
Wow.
online forms are filled out. I went, you got to go get papers notarized. Two pages notarized and sent in.
Okay. Okay. All
I
right.
faxed.
Yeah.
But then that whole bundle then somebody has to approve.
Interesting. Okay.
Yeah.
Ken,
All
there
right.
were 2 other ticker symbols that were listed in the chat. QS, QuantumScape, by Karen, and then EVFM.
QS and EV.
FM, FM. F is in Frank, M is in Mary.
This is free. I have a quick comment on QS. It just shut up, and then, I had the position. I had to really do a lot of option trading to protect. Finally, it came up, and I made up my losses. It's really a very volatile stock, QS.
Yeah. Yeah, it looks like it. At least in the at least on that chart. Yeah. Okay. So it hasn't been. It's a relatively new issue. So this thing goes back as
Yes.
far as when it was issued. So somewhere in September.
Correct. Just a few months.
Yeah,
Yeah.
this is the solid state battery, lithium battery. But
Yeah,
this
yeah.
it also came from a SPAC. So it's not even a product that's in the market yet. It's really just on hopium that it just goes up and down. It had a recent earnings.
I think Thursday or Friday it went up by about $8 or $9.
It shows on Friday it went down $8 or $9.
Yeah, correct. Thursday,
Yeah.
I think, is when it went up.
Yeah.
And then QuantumScape is well capitalized by Volkswagen as well. So this is a long-term play. That's people
Yeah,
are
yeah,
just
I
in
agree.
it.
I
Yeah.
agree.
Okay. All
Someone
right.
you might want to check is CCIV. The SPAC. They're going to be acquiring, what's that? It's like Lucid or Lucid. It's a EV auto company.
Lucid.
Lucid, yeah. So
Churchill Capital Corp.
yeah.
It's a acquiring other companies or what?
Yeah, it's a SPAC. It's gonna.
It's a
Oh, SPAC.
yeah,
I
SPAC.
see.
Yeah.
Okay.
Pretty well known that they're going to acquire Lucid, who's a pretty up and coming EV company.
So
luxury.
Scott, how much do you know about SPACs? Is it something that's worth looking into or not? I mean, so it's basically, my understanding is that they basically go out and they try to buy other companies up and put it under one umbrella. Is that correct?
Yeah, but basically they go public, they raise money, and then they have like instead of an S1 where a company goes IPO, I don't know what they call it, but they have a plan that they make public of what kind of companies they're going to buy or acquire. And so that alone allows them to go public and raise money. And then sometimes they kind of announce who they're going to buy or what company they're going to buy, like this one. So you're basically investing in Lucid at this point. But others, they haven't announced who they're going to buy yet. They just, they go up a lot because maybe the manager of the SPAC is well known or well connected. So they're just buying into their reputation, basically. And a lot of wealthy individuals they're all getting into SPACs, just like 4 years ago, everyone was doing an ICO. It's like
So is this kind of the new IPO?
Yeah, it's like an easier way to go IPO in a way. So it's like kind of like a reverse merger. But in the case of Lucid, where you kind of have an idea of who you're going to buy, it's an easier way to go public without doing a regular IPO.
Okay.
But it's also a way just to raise money from the public because you're famous, you have a good name, and you have a theme that you say you're going to go buy these kinds of companies, and they just trust you're going to buy the right ones.
So it's interesting. Several years ago, I was seeing all these ETFs popping up, and they were basically all passive ETFs. You basically just said, okay, this is the kind of stuff we're going to go and buy, and they go out and buy this whole portfolio. And then I was listening to I think it was Kathy from ARC, and she put together this idea of a managed ETF. And I was fascinated. I thought that would make more sense. They should have an Alex ETF or something like that actually trades trades at will. But I think that's more of something else other than an ETF. There's got to be some sort of restrictions. It looked like Kathy was able to get around some of the restrictions, and she's done exceedingly well with the ARC funds.
And someone can correct me if I'm wrong, but there's some, I don't know a lot about SPACs, but there's some usually come out at $10 a share. And is there some like limitation where they can't go below $10 a share? Can anyone eliminate on that?
No idea.
So my understanding was that technically that they can go below $10 a share, but the supposition is that it's agreed that they're worth that much. My understanding is that they're not likely to go under $10 a share because sort of everybody in the mix agrees that they're worth $10 a share, and that's like the starting point. And to be honest, I'm familiar with SPACs, but I don't quite understand them. They're known as blank check companies. I think they're an interesting idea because my perspective is that some of these people that I've heard interviewed on like Squawk Box or whatever, you can just hear their expertise and their knowledge and what they're saying, right? They're just not flying off the handle. They really understand financial markets. And so then the point is that now they're putting that expertise to work, and then they're getting money, right? So they're getting like billions of dollars. One of my guys that I like is Chamath, and I can't pronounce his last name, but
I do invest. This is Judith again. I do invest in Chamath Palihapitiya. He's from Sri Lanka. He was an executive on Facebook, and he's had two very successful ones. If you want to look at those, Ken, one of them is Open, O-P-E-N, Open Door Technology. And the other one is Space, S-P-C-E. That's the one with Branson.
O-P-E-N?
O-P-E-N, Open Door.
Yeah. And what's the other one?
S as in Sam, P as in Paul, C as in cat, E as in elephant, Space. That's the Branson company. And he another one that I'm now following that is a SPAC, but Open and Space have already been merged. The SPAC is IPOE, and that one has they're already in a merger with SoFi. That's why it's been going up, IPOE. But the other two, I followed it so when they were SPACs, I followed Chamath and saw the transition, which was building more confidence in what he was doing. I really didn't trust him, but knew that he was an executive at Facebook and had that transition successfully. And I've profited from both of those, Open and Space. And then the other one is Bill Ackman's PSTH. S as in Sam.
S is one of the most difficult letters for me to hear. My hearing is
P as in Paul, S as in Sam. No, it starts with a P. T as in Tom, H as in Harry. P as in Paul, S T H.
Papa Sierra Tango Hotel.
Yeah, I got it.
So just like Scott was saying, if you find an executive who has had prior success and is now opening a SPAC, that's a big vote of confidence. But it doesn't mean it's successful. It's just you follow the charts. But with Open and Space, I saw those that just took off. And Open, right? It's a real estate technology app, and I don't know too much about it, but I saw now that I see the advertisements, I can understand what it's actually doing. It's innovative, where people can buy and sell their homes online.
So Judith, you pick up these things from where?
Well, a lot of it is through YouTube, actually. YouTube is a fabulous source. And I saw, when I followed Chamath from the YouTube, I was just doing a lot of researching on YouTube. But then I saw when they turned into an actual company, Open, because I followed him before during the IPOA SPAC, and it created this one. Open was IPOB, Space was IPOA, but they created this following of people that now Kathy invests in both of those, Open and Space, which is a huge source of capital, backing. But as the product becomes very useful and acceptable, then they're just consolidating.
So it sounds like the focal point is Kathy, really.
Well, not only Kathy, but Chamath as well, having had previous successful businesses that then they can extend. In fact, Chamath, he wants to converge technology with the current source. Another one that's recent that had bad information recently, that some kind of conflict they had, was Clover Health, CLOV. I divested some of it. I didn't keep, once I heard they had bad news, I just started to pull some profit off the table. But they had some investigation that it's nothing validated yet, but they had an investigation, and the news hurt the stock a little bit. But this is actually a technology that's merging with the healthcare specifically for Medicare.
So my comment is that, to follow on to a lot of what Judith just said, is that these guys are visionaries, right? I mean, doesn't mean that they're always right. They could be wrong about the future and what's going to happen in the future. They're visionaries. Chamath is a visionary. He sees the future, basically, or he knows, and then he knows how to make money at it. So anyway, that's just my comment. They're visionaries.
Okay.
But not all SPACs are created equal. I would say, speak very cautious, because they are a trap for if we don't do our homework and investigate who's creating the SPAC and what intention do they have for that merger.
Right. Right. Makes sense. All righty. I'm going to put my phonetic alphabet here. This helps, guys. And that's what Steve was basically quoting from. It helps me be able to work with my challenged hearing here, even though I've got headphones on. The S, the P, any phonetic that has an plosive or a hiss sound, I cannot hear. But I can hear Sierra. The only thing I hear is the era, but that's enough to clue me in. But anyway, go ahead. Any others? This looks like Clover is probably not a good one to get into. It's been going down ever since the IPO, looks like.
I have a symbol Z like zebra, Zillow.
Zillow?
Yeah, Z.
Yeah.
That's it.
That's it.
Only one letter.
Wow. Wow, nice. Except that you got profit taking here recently, so it gapped up and then you got profit taking. So are you still in it?
No, I got out with a covered call. I'm fine. I made money and got out.
So are you basically buying the stock and selling the calls on it, or what?
Yeah, I'm doing covered call. I look at the indicators and everything. I make a decision. I also have a software called Chaikin Analytics. And when they say it's a bullish, then I kind of look at the overbought, oversold. So I use that indicators to buy and sell.
But you're basically buying the stock and then selling a call.
Correct.
Okay. Yeah, I was doing it years ago, and then I met a fellow by the name of Adel Laster, and he said to utilize my capital more effectively, and so he had let's see if So let's take a thing like SPY here, for example, and we put on a vertical call spread. Let me get more strikes than that here. And I gotta fix this here. Shoot. I need to put in. Yeah. So if you use a 60-30 delta, so we're
So you're talking about a debit vertical spread, right?
yeah. So you
Yeah, I'm listening, Padi.
yeah. So if you do a 60-30, so you got to go to 93.95 here. You end up with a risk profile that looks like that. And if you compare that to just buying the stock, and you look at how much capital you need here, the capital is very, very small. So you only require $700 of capital, $760 of capital, versus if you bought the stock outright, you would be buying.
So you're doing 60-30 delta?
Yeah. Yeah. As opposed to you paid $700 for the same effect as you would get if you would put up $700 versus you would put up $38,000. So you can get the same effect. Now you got to sell a call on this thing too, right?
So you don't worry about the technical indicators when you do the trade, or how do you
No, still
decide?
this is a debit. This is a debit spread, right?
Yeah.
So you still use the entry points as to whatever you're going to use as an entry point, right? So you say, okay, I'm going to enter with a stochastic or something. But then when you enter, you're buying a 60-30 delta vertical call spread. And so you're going to use, instead of almost $39,000 of capital, you're only going to use $700 of capital. And it'll get you the same return on capital. I mean, it'll get you the same return, but with so much less capital. It's what is that? 700 versus 38,000. You got 50 times leverage there. So you use 50 times less capital, and then you're protected on the downside. So when you sell the vertical, when you sell the call, when you buy the stock, and then you sell the call on it. Let me see if I can sell the call on it real quickly here. Sell at 30 delta. So I'm going to put that at sell at 30.
Obviously with a option, you'll make 3 or 4 times than the stock. There's no question about it.
Yeah.
Most of my trades are like my core position in my portfolio. So
Say it again.
Most of my positions are like core portfolios. I hold it for a long time.
Yeah.
I use cover cost to generate additional income.
Yeah.
What you're telling me is that even in those positions, I'm better off with a spread than
if you're gonna swing trade, one of the options might be to use a debit spread. If you're going to be having a long-term, like what you're saying, a long-term position where you have something like this in there, or SPY in there, it's better. So it gets you tax advantage, right? So you basically get the appreciation in SPY, and then you get you selling premium. You're selling a call against it, and you basically collect rent on the SPY.
Correct.
Especially if you don't have it called away from you. That's really nice.
Well, I can always roll or do a low delta out of the money option.
Right. But I thought, when I saw this vertical, I made a presentation on selling covered calls, and this guy in the back of the room said, hey, you know, you could do it with a lot less capital. It's like, oh, okay, sounds good. And since I'm a swing trader anyway, the vertical debit spread was a much better deal to me. And then you have this slope that's very small, and then as long as you're right, what happens is that as time goes along, this value here at 179 goes all the way up to 400. So it's like you bet a little bit, yeah, you can lose a little bit, make a little bit, but as time goes on, it just gradually goes up to the top of this gain chart.
Yeah, there's no question with option,
Yeah.
You will get a lot more return.
Yeah, but it depends on your style, right? So if you're not a swing trader, it doesn't work for you.
You know, my problem is I'm not very good at the technical indicators going at the right time. So that's my problem.
Yeah.
You know,
Well,
I'm not like computer savvy like you.
Yeah. Well, so what you want to do, you're email savvy though, right?
Yes.
So the first part of the presentation here was how to use Steve Alexander, steve.alex@gmail.com. You send him an email and he'll send you his hot tips of the day kind of a thing. And I don't know how it could be made any simpler. I mean, Steve's doing a fabulous job there. Steve, are you still there online? I got so many on the chart here now, the number of participants here. He may have left. But yeah, so I hear somebody trying. But anyway, yeah, so you don't have to take all of your portfolio, but just take a little bit of it and give it a try.
Thank you.
Yeah, sure.
Hey, Ken, can you try Unity? It's a U.
Just a U. Unity software? Ooh,
Yeah,
not looking good to me.
it's for gaming, and it was very hot a few days ago until recently.
So what's the reasoning that it would go back up?
Well, that's the only gateway for gaming, and gaming is going to be big in the future. It's a software to develop games, video games.
Okay. But so there's the developer. So there's a developer and there's a seller of the games, right?
Yeah.
So my daughter works for a company that it develops medical products, and so they basically get paid by the medical products that they develop, and then the company that they sell that they are licensed to or commissioned by are the ones that sell the product. The ones that sell the product make 10 to 100 times more than what the developers get.
Okay.
So yeah, so like game, whoever's selling the products, yeah, I'd like to bet on them. Like Facebook is selling a product, if you will, right?
Mm-hmm.
And so yeah, but that's an interesting one. It's got almost 5 million shares traded per day, so that's not too bad.
Mm-hmm.
And I want to comment on this one because I am somewhat familiar with the uniqueness of Unity software. It also allows the gamer to design their own games, and they can monetize their gaming experience by creating links for other people to participate. So it's seen as like an entrepreneurial gaming software as well. That's why there's value in here. But it could be, I mean, it's fairly new. It could take time before the product is familiar to everybody. But you don't just purchase a game, you create your own game. And as a gamer, you develop a community around your gaming so that then you have input and you can actually monetize through that. So they design it, the gamer designs it, and then they can have inflow of cash, which is part of this. I mean, I think they even have a kit that they sell for gamers to create their own businesses. So that's why this is unique. It's not a general gaming, but it's a very specific niche.
Oh, I see. Okay.
Are these the guys that make Roblox?
I'm not sure. I don't know that.
Probably not.
Sounds like Roblox.
But
And
they are
really
probably
weird.
into the augmented realities. So AR probably is also in their realm.
And I heard a few comments that the universities will incorporate this as well because it's a good educational tool. So Unity is also, like, computer engineers that are interested in designing software can also use this, which is part of their I think it's a Bay Area company, but that's part of their lure is to get the software to be used as an educational tool that can then be monetized.
Yeah, Roblox isn't public yet, but they're going public.
And then one other comment is that so it's a platform, right? So I looked at the website, admittedly, but it's a platform for software development. And then it's also can be used, so somebody mentioned AR, but there's also machine learning too, right? Artificial intelligence, machine learning applications of this that can be developed. So it's actually pretty broad. It's not just a gaming thing.
I do like this one, but it's just one of those speculative plays that's maybe longer term we'll see a return. But I think the gaming really is that's being dominated by Google and Facebook. I mean, they're the ones that have the capital to expand. So Google is a great one because they own YouTube. And they had a fantastic earnings. And a big portion of those earnings are from the gaming that's just taking off. Google, Microsoft.
How would you trade this? Would you put a buy stop above it, or what would you just go and buy it, or what? How would you guys trade this kind of a stock? To me, it's going, the money flow is going out. Would you wait for that thing to turn around and come back up? Would you wait for the stochastic to hit? How would you enter something like this, especially something so as speculative as this? Or you just buy it?
I just straight out buy it. In my case, I'm looking for those companies that can be longer term. I mean, I'm also day trading, so this is just capital that I set aside. I just pick up shares. When I see dips with concepts for the future, I pick up shares because I don't have control with the timing. I've been an options trader where, I've been wrong a lot. I put a put credit spread, call credit spread, and my capital's gone if I'm wrong. In this case, if I'm wrong temporarily. I can pick up property. I can pick up shares that can then, over longer term, on the concept of the company, I can benefit. But really, it's just a speculative play, a very small portion of capital.
So do you carry a stop loss on the thing or not?
No, on these speculative plays, I don't. I just keep them on until I see the money coming out, and I see a big correction. That's I generally just keep if it retraces within the 30%, I start to get out. But a very small amount of capital goes in this. It's just one of those things that later you can say, well, why didn't I invest in that? It was so obvious. Why didn't I invest in that idea longer term?
Yeah.
Judy, do you buy a lot of shares or just like 10, 15, 20 or 100? Or what's your strategy?
Because it's so new, and really you haven't even seen this product in the market yet. It's just it's a company that's just conceptually new. I just picked up 50 shares. That's what I did.
Okay.
Ken, another stock in the gaming field would be Playtika, Papa Lima Tango Kilo.
Thank you. So that's been up. That's up nicely, and it's actually got money starting to flow into it. So it's up 5% here in the last month, and it's a new issue, evidently, since it doesn't have very much history here. It's only been around for like 6
That's right, only a couple months.
Yeah. So what's the play on that?
It's out of, well, I know it's out of Israel, and they're developing a lot of games. It's becoming very popular in the Middle East. And I've done very well so far on it. I think the play is probably more for swing. At least that's my approach.
You're swing trading it. So what do you use as your entry? Catherine, what do you use as your entry?
Working very well. Well, I'm watching when it's going down. Like I probably would get in Monday based on where it is now. The target that I've been looking at is 42, and it looks like the analysts that are following it are suggesting the target's going to be between 40 and 45. So I'm trying to get in the 30 to 33 range.
So now what would you use to enter the trade? Would you use a limit order? Would you use a stop order?
No, I'd use a limit order.
Just limit order at a particular price. So one of the things that I find has been pretty useful is a stop limit order. So I take the previous day's high and I say I put a stop limit on that, and if so it'd be 33.40, and if it hits 33.40, basically I try to get back in with the limit. So it doesn't, if it pops through it a long way, I'm not going to do it, but and then this allows me to follow it down, right? So if it continues on down, then the next day I just keep on following it down. And it's kind of nice back here. You would have just kept following it down, and you would have ended up with pretty close to a bottom here if you use a stop limit on that trade. I don't know if you ever use that kind of
I do. I like seeing their money flow chart too.
Okay.
It's nice to see the money's going in there.
Okay. Yeah, so one of the things I also like to look at is the money flow of the whole market. This is the S&P 500 for a SPY, and it's been going down. It's been diddling around. It's not been moving one way or the other. The small cap has been moving up, and it's been basically plateaued out recently. The large cap, the Dow, has been going down, even though the price is going up. So I'm expecting to see the thing still correct. It's going to somehow get back down to something. Let's see here. Yeah, and it's continuing down. So I expect there to be a fall here. And then this one here is the Qs, and the Qs are starting to pick up. Some money is starting to flow into them, but it's not a huge amount. Financials have been flat for almost a month. The TLT has been going down, and so it's been, yeah, hopefully nobody's in TLT anymore. And then China was going flat sideways, and then it's starting to drop off. And what I usually like to see is transportation and technology. This transportation is this one here on the end. And transportation, you see money flowing out, and you see the price going up yet. I would expect this thing to all start turning down. With money flowing out of basically every ETF, I would expect you to see something coming down in the next short period of time. And if you look at the Jenkins Cycle, this is the Jenkins Cycle, and the last little bit of it here is showing we hit the end of the Jenkins Cycle a few days ago, and it's starting to drop on down. I would imagine it would start dropping on down here. I can't see anything to push it up unless there's going to be the stimulus package, in which case the stimulus usually gives it a shot in the arm, like back here. This one here was a stimulus, or not. Well, this was the big stimulus back here in March. And then there was a little bitty stimulus here, which popped it up. So unless they sign some sort of stimulus bill, I would think that this thing's going to start correcting a little bit here. So I'm basically on the sidelines right now, waiting. And actually, I made money on Friday on the short side. And let's see. Oh, here's an interesting one too. So there's, let's see. So I have this thing that goes back and averages all of the previous years. So it looks back 10 years, 12 years in this case. And it says, okay, what's the market look like? This is kind of a projection on what the market shape is going to look like. Well, it turns out that this spike dominated the dip here. So I wanted to get rid of that. So I tried to write some software around it so that we don't have, hopefully we're not going to have another COVID situation here. So I wanted to eliminate that from the analysis. So I came up with another indicator analysis that basically gets rid of this anomaly. And this is more of what you should see. should see basically the end or somewhere around March 23rd, and that seems to be happening almost every year. So if you want to be in an entry point for the market, you might want to plan on somewhere around March 23rd to be to put an entry into the market. It's basically showing that the first few months it's basically flat, but then after that you should see a nice upswing until April, May, and into June.
Yeah, I've seen some studies that indicate the options expiration week in the third month of the quarter is usually the worst part of the quarter, and the options expiration week in September is the worst week of the year. So usually around the end of the third quarter, that middle of the third month, or the third quarter of a quarter, is when you tend to see weakness.
So that's right here, right?
Yeah, that correlates with what I had
Cool.
studied.
Cool. Well, that's good to hear. Because I couldn't understand exactly why that happened, but that makes sense, Scott. Yeah, that's a good one. So mark that on your calendars. March 23rd, 24th, as a potential entry for the people that want to be investors. That might be a good entry point. Okay.
So Ken, just as a follow-up comment, so that means from here until that period, are you projecting just a sideways trend? Doesn't look like there's in your indicator.
Yeah, that's what it looks like here. It's basically kind of a sideways motion. So some years it's up, some years it's down. But when you look at 12 years worth, I think this is maybe 20 years worth here.
So good time to collect premium.
Years. So yeah,
actually not leverage because I mean this is also a good period in case you're expecting a down move. It's a good period for buying some insurance.
Buy some insurance. Mm-hmm. Yeah, and one of the things that Liz Ann Saunders brought up I thought was a really good point. If you look at, this is the VIX, and if you look at the VIX, it was sitting down around 10 for a long time, and then it spiked way the heck up, right? Well, it hasn't gone back below 20 for a year. So that says that you should be able to collect some premium, right?
Right.
So,
and this is Renee.
Yeah.
If March 23rd seems like a good time to buy SPY, is that also a good time to sell TLT?
Yeah, for TLT, it looks like you should probably get rid of it. It looks like that's a good question because it should go down. Well, actually, it's going flat. So it's actually going flat right now, the market. And so what Judith was saying is that the market is basically going flat. So us option traders can actually sell premium, and so we make money on the market going sideways. So for somebody that's holding a position, you probably want to be out of TLT because you got a couple things happening. You got money is flowing out, people are selling it, and the price is going down. So it's probably not something you want to hold on to.
So it sounds like get rid of all TLT and just put it in cash until March 23rd and then go back into SPY.
Yep.
Okay.
And if you want to buy anything, buy CDs or something like that, just to collect, a 1/10% or 1/4% or something like that.
For short term?
Yeah. I don't know if you can. I don't know if there's anything short term. We're talking about 1 month, right?
Probably not worth it.
Yeah. Yeah. Probably more worth the headache just dealing with it.
Yeah. Okay. Thanks.
Or, take a look at Steve's trades and put a couple of bucks into that. You'll probably make more with his stuff than any of the other stuff. He's basically swing trading in and out of stuff. So yeah.
I didn't hear the last comment. You're saying Steve?
Steve Alexander.
Okay.
Yeah. Yeah. So.
So the other question I have is, if we are anticipating a sideways market from here until March, what are other traders doing? Would you have more confidence that the market may snap down, so you sell the calls, or could the market have these spikes up, and do you sell puts? What are other traders doing, or do you just get an iron condor and just write it out? Do you have anyone have any input?
Scott or Bill, any suggestions?
I like selling iron condors in that situation, and then managing it if it gets attacked one side or the other. Because the VIX is still high, so you could still roll and adjust your positions and still get credits when the VIX is high like this. Once it gets below 15, it doesn't really work as much anymore. But the VIX is still high, so it's easy to get premiums.
That makes a lot of sense. I never thought about the breakover point at 15. That's a good observation.
Yeah, just in my experience, once, you know, it's more like 13, but at 15 it just gets harder, and at 13 it's really hard to. Now you're rolling and you're paying money to roll, and that's not fun.
So
Ken, that's what I noticed. The same thing. The BBIC quit when the VIX got below about 15 or 14.
Okay.
What is the BBIC?
I will show you. It's the Bill Burmeister Iron Condor. And so I wrote a piece of software. A group of us got together, and I tried to capture some of Bill's strategy, brain power, what have you, into software. And so this is what it does. It's an iron condor, and it takes the previous week's movement, and it says, okay, the red is a sell. If it's above, it's you're selling a call. A green is you're buying a call. A red below the line says you're selling a put, and a green below the line says you're buying a put. So here is 2 weeks of time, and it stayed right down the center of this channel. And so you basically sell iron condors on a weekly basis, and you basically collect all your premium by the end. Here is one where it didn't work, and so you sold the call and you sold the put. It broke through the put, and then what happens is when it goes through the put, when it stops, it actually buys back the short put and leaves the long put. So you're trying to make money. When it actually does that, you're trying to make money on the long put. And here it is by the end of the week, and you actually exceeded the long put, and you most likely made money on the long put side, not on the iron condor itself, although you made full premium on the call side. That may be too complicated for 90% of all the people here, but if anybody has understanding iron condors, it kind of draws out the picture of what an iron condor is and how it is executed based on weekly options expiration. And here is another situation on Netflix. And I used the situation like this a few years back, where it was going right down the center. Bill suggested we do BBICs, and I did, and it was doing great. It was going down the center of the channel, going down the center channel. It was making 30% per week. Great. And then it broke out. When it broke out, it didn't do this. It didn't gap up like this, but it just broke out gradually, and it kept on going. So I ended up going. I exercised the long call position, and it doubled my value on Netflix over the next year. So it's a way of entering when the market's going sideways, and then when it finally breaks out, it's beautiful. So the BBIC basically makes money when it goes sideways. When it breaks out, it tries to take and capture the gains as it's moving away from that center position. So that's why we call it something a little bit different than just an iron condor. That's why we call it Bill Burmeister's iron condor. that good, or Judith, or not? Is that
Yeah,
too much?
wonderful. Yeah.
Okay.
I like the concept. It's, I like
all
the
right.
concept.
All right. So if you want to see it in a presentation on that, the Excess Profits website, we had one of the members of our group in San Marcos here, his daughters, he taught his daughters how to do it. Let's see if I can find it here.
Teenage daughters.
Teenage daughters, yeah. So he had 3 teenage daughters, and he said, you got a choice this summer. You can either go to school for summer school, or you can stay home and earn some money. Or you can go to get a job, or I can train you how to trade. And so they said, Dad, teach us how to trade. So they did, and then they made a presentation to our group, and you can see it here. Where is it here?
That's a great incentive.
Oh man!
You have money up front.
Yeah. So Dad loaned them $10,000 each, and then they said, well, what can you do with it? And so here it is. Here's Heikenhachi analysis improvements. And so they actually gave a presentation to our group.
Oh, that's wonderful.
What they did, and it was really brilliant. It was great. Let's see if I'm seeing it. Is this the right one?
I have a follow-up question. Did they continue trading, the daughters?
So they went back to school.
Yeah, they went back to school.
Yeah, so they went back to school, and they, I don't know if they're trading now or not.
2 went to college back east, and I guess a third would probably be in college now too.
Yeah, so they were totally consumed when they went back to school. So that was one of them. Did they give 2 presentations still, or just one?
I don't think this is they did a different, this Heikenhachi was different.
Okay. So they did
I don't think it was 18. I think it's earlier than 18. Around 16, maybe.
Bill, so you're the one that created that. I mean, I've seen the model before, but at what point is the system already automating for you the decision of at what point?
Well, Ken automated it. Trying to do it in Thinkorswim, it was a massive spreadsheet, and you were likely to make a mistake with an entry.
Yeah.
Or the TradeStation code just did it.
Because I find the Iron Condor is the easiest thing is to put it on and create that range. But when it breaks, is making that decision at what point. Sometimes it breaks and it pops right into your range and you'll be fine. But making that decision to close out the short and carry the long, I mean, that's more judgment.
Well, it was, Ken coded it and then made an Excel spreadsheet that did it, but then you had to manually, are you using TradeStation or TOS?
I use TOS.
Oh, okay. So, well, not okay, because this spreadsheet had all these 4 what ifs that all had to be entered, that if this happened and you do, and if you made a mistake, it didn't work.
Yeah, so what happens is that with coding, you can actually code it up and it works every time, right? With, I created a spreadsheet, and the idea was that you had to enter all of these trades. So you had to buy a call, sell a call, buy a put, sell a put, and then you had to create, on each of those, you had to create a order cancels order.
Times 4.
What?
Times 4 for
Times
each
4.
side.
Yeah, and so it was very tedious to do, but what we originally started with was the guy's name is Joe Zhao. His daughters, I was trying to get his daughters to actually put the trades into Thinkorswim, and then for one of them to put it in, another one to check it, and that kind of stuff, so that we would have a fairly foolproof way before I coded it up. just to see if it all worked. And it did indeed work. Joe was pretty good at it, so he actually put it in by hand himself, and he tracked them. And yeah, so what this is it says, okay, it's going to go against you here. This price action is going against you. When it gets to the difference between here and here, between the put strike and the 2 put strikes, this one you sell, this one you buy, when it gets to halfway, it buys back this put, the short put. Okay, so it's no longer there, right? And then as price action keeps on going down, you're making money on the long put side. And hopefully you've gotten out somewhere around here, and you would have actually made money because the premium, there still is premium on the long put side. It was pretty good, but it's extremely complicated. So, but the expectancy was for when we were doing this, which was a high volatility, the expectancy was above 60%, I think it was. So you should more than 60% of the time you were winning, and you'd win more than you'd lose. So it was pretty cool. But I can't find the one, Bill, on the.
Kirk just posted it on the chat.
Okay, all right. Okay,
it
good.
was in 2017, he said.
Excellent. Okay, good.
Yeah,
So,
I remember that presentation.
Yeah,
I copied the link on the chat, but I can't seem to get out of Zoom to paste it somewhere else.
Yeah. Well,
is there a way of getting out of Zoom?
No. You can copy it. And then
Are you on a phone or your computer?
I'm on the computer, and I already copied, but I can't minimize the screen to paste it anywhere.
Yeah, press the escape button.
Yep.
You're on Zoom.
Oh, great. Thank you.
Yeah. So, all right, cool. But that's way beyond, Renee, way beyond anything you want to even try to approach. I mean, it's mind-boggling to us that do this for a living for the last 10 years. And I couldn't do it by hand myself. Bill, bless his heart, was able to do it, and he had so much success with it that I was able to capture it and put it into software.
Can you still hear me?
What's that?
Can you still hear me?
Yeah.
Okay, I minimized the screen and I did the paste, but now I have like a 1-inch box with Zoom. I can't seem to get it back.
Should be able to
Oh, never mind. I found an arrow. It got me. Thank you.
All right.
Ken, I just wanted to say that the Iron Condor is just a simple put it on, put it off when you're losing, when it's hit your break even. I mean, this is a way to maximize so that you don't lose, right? But
correct.
It's just that, I mean, if we're anticipating, not that I'm recommending anything, but if we're anticipating a sideways market, we can take advantage of selling premium. And if you're wrong, you're wrong. You just shut the trade down.
You shut the trade down, or you a lot of times you leave it to the end and you let it expire and hope that you're not losing too much. As long as the market moves sideways more often than it moves in any direction, you're okay. And the key was that you have fixed risk. You know exactly how much money you can risk on the trade. But for me, every time I tried it prior to Bill's thing, 10 years before that, every time I tried it, I had a negative expectancy. So it's like, nah, I tried all different ways, other ways of trading, and much more successful at it.
Well, the other advantage to it was they were weeklies, and that's when the theta decay is the most extreme.
Right.
Bill, what ticker are you using for these?
I was using Amazon, Netflix.
So all of these here.
So high volume, high volatility.
Yeah.
So these were the
Google.
These were the stocks that we used here: Netflix, Nvidia, Amazon, Zoom, Tesla.
Zoom wasn't around back then.
Yeah, but I started using that. But those are the ones that we would typically do.
Yeah.
Amazon was a real good one because the premium was fabulous.
So Bill, you wouldn't recommend a SPY?
No, the volatility would be too low.
Yeah, typically. But you could see that it does indeed go right down the center of the channel here, right? Here's SPY. And this is over a 2-week period of time, and it just went right down the center. So you would have made max gain for the last 2 weeks. So,
and the concept was you let them go to expiration worthless, hopefully.
Right. Yeah. So you had three different outcomes. If it went sideways, you made money from it going sideways, and you're like Bill, you got every penny out of it. Or if you were if it went up against you north, so it started making money in the long side, or started shooting up above the calls, you make money on the long side. It starts falling south, you make money on the put side. And I like that a lot. Whichever way the market went, you make money.
So what index would you lean toward, Bill?
At this point, I don't know if they work anymore. I think there was an anomaly in that the volatility or the premium you were getting was extraordinarily high relative to the risk. I think that was part of why it worked.
Yeah. Yeah.
And then Trump came along and won, and the VIX dropped like a rock.
Yeah, that's when it stopped. I didn't do the BBIC, but I did something different. But that's when Trump got elected. That's when that ended for me. It just the VIX went down. It kept going straight up, and so selling iron condors, you were always just defending your calls, and you weren't getting any premium for it. It wasn't worth it.
Yeah, the calls kept killing me.
Yeah.
And for the general investor, it's been a great return.
Yeah.
It's just with these volatility plays, this is when we get hurt, when we're challenged on the short side.
With the current administration, maybe we could get back to selling premium, be more volatile.
Yeah.
So,
well,
all right. Any other comments, questions? We got I see we've got about 7 minutes on the clock here yet. I'm trying to capture all the chats and anything else.
Hey, Ken.
Yeah.
The money flow, inflow, outflow is very useful. Where to find that the spreadsheet?
Not a spreadsheet. It's a code. You have TradeStation?
Yes.
Okay, so if you have TradeStation, just go to my website, ken.accessprofits. And so if you go ken.accessprofits like that, you go over here and there is this hamburger. And at the bottom of it, it says TradeStation code.
Okay.
And there you'll see a spreadsheet that pops up. And this has got all of the links to the various pieces of code that I've released. And the one of them you're interested in is the money flow here. So just download that. But it's TradeStation code. So you're going to have to have TradeStation on that.
Okay.
All right.
Thanks.
And the question for Steve Alexander, has he had any trades? I don't know if Steve is still on. I don't see Steve. And so I haven't seen anything come from Steve lately in the last day or two. So
on the 18th, he said sell UAA, TNA, and TQQQ if you're holding it.
Okay. Okay, Karen said that. Okay, cool. All right. All right. Anything else anybody has? This has been a very fruitful discussion, people. Thank you very much for participating. It's nice to see good participation like this. Anything else? Otherwise, be great. You know, I see all these icons. Could everybody just turn on their video just for a quick second, just to see who all these people are?
Yeah,
You can.
Great. Good to see you guys.
Hey, Ken, quick question.
Yeah.
You showed the performance initially for those TQQQ, SPL, XL.
Yep.
What strategy you use for those trades?
The case stochastic.
Oh, okay, gotcha. Thank
Yeah,
you.
so here it is in the bottom. So it's basically you got, here's the buy signal, right? And then you got another phantom buy here. So yeah, that's all I was doing.
So you fully automate those, right?
Yeah. Yeah, and it doesn't really much matter when you're fully automated like this, because it happens only on day bars. But it took what is it? Well, I guess I don't know how much. 450. Yeah, it made a couple $100,000 here.
That's nice. Actually, you can manually trade the one you see the signal.
Yeah, yeah, and so that's what I was trying to do with so that more people could utilize it. So it's available for not only TradeStation, but it's also available for Thinkorswim platform. So you can also download it. If you go to Excess Profits, you can go to Excess Profits. You can download it into your platform, and you'll see the TradeStation or the case stochastic there too, and it looks almost identical. So Tim Sire, thank you very much. Thank you very much for putting this together. And this is the same thing here. So anybody want to use either one of them? Great. And I got every once in a while I get an email from somebody, and I really appreciate the emails, people saying, hey, the case stochastic worked for me again. I made so much profit. It's like, excellent, cool, nice work. Good to hear.
And thank you, Ken, for your generosity and sharing your knowledge too. Thank you.
Thank you, guys.
Thank you.
All right. Well, let me close it down here, guys. Good seeing you all. Finally see everybody.
Have a wonderful weekend.
You too.